to our next company now. It is tri-listed, but you can buy its shares on AIM. It's PetroTal. It was founded 7 years ago and is now the largest crude oil producer in Peru. So can the company increase its oil production, including its recent acquisition of Block 131? And what about its dividend programs and policies? I'm delighted to be joined live now by Manuel Zúñiga, who is the president and chief executive. A very, very warm welcome to you.
Thank you so much, Sarah. It's a pleasure to be here with all of you. As Sarah mentioned, PetroTal was set up 7 years ago, and we're now the largest crude oil producer in Peru. This morning, we reported more than 24,000 barrels of oil per day. I would like to start with this picture that shows our camp in the Bretana oil field. We're in the middle of the Amazon jungle. That river is the Ucayali River, and across the river is the Pacaya-Samiria Reserve, which is the second largest natural reserve in Peru. In our area of influence, we have 18 communities that add up to about 8,000 people. As you can imagine, then we don't only follow ESG rules, we actually lead in everything to do with the environment, social, and of course, the governance that we apply. The oil field that is our main producing asset, it has 6,000 hectares, like the size of 6,000 blocks, and our camp has 12 hectares only. So we have a very small footprint, out of which we drill wells across the river or going south. The oil wells, most of them are horizontal wells of about 1,000 meters, and the water disposal wells are drilled on the flanks. So let me go through the presentation. I will provide more detail on all of this. As I mentioned before, and you also mentioned, we are listed in 3 places. That's extremely important. We operate in Peru, and it's something that few people know, that Peru has a credit rating. Only Chile in the Americas, in Latin America, has higher rating than Peru. They follow the rule of law. We are fortunate to have a low royalty scheme, so everything is quite stable. Although a poor country, they have done an amazing job to continue growing the country. So we are in the right place at the right time to help Peru progress. Here you can see some of the data. As I mentioned just now, we are currently producing ahead of our guidance at even more than 24,000 barrels per day. We have a market cap now of about 455 million. I checked before we started the conversation. And it's something that we pay a lot of attention is the fact that we've been growing production. Since inception, we have already produced more than 24 million barrels of oil. And I'll show you a little bit more about the reserve potential that we have in our fields. This is the management team. I'm here with Camilo McAllister, our CFO, and Jose Contreras, our Chief Operating Officer. So on the Q&A, in case I don't know an answer for something, which I doubt, they will be very happy to help me. On the investment thesis, we have been able to establish a company in Peru in such a way that now we can see opportunities that others may not see. And the example of that is that Block 131 that we acquired that has right now a small oil field that we intend to grow as we have done with Bretana. To date, we have distributed about more than $100 million in dividends. So we're quite committed on continue giving money back to investors. We're very thankful for all the support in the past. And I think this company can do much, much better as we continue growing. And we are debt-free. So it's a 455 million market cap, 24,000 barrels of production. We have given back $100 million debt-free. And that sets the stage for us to grow in the future. So I always like this to show this map, give you a better idea of where we're located. You see next to the coast, the city of Lima, the capital. In the northeast part, you see Iquitos. That's the capital of the jungle region, or the northern jungle region. Block 95 is just to the southwest. And we move our oil mostly via barges. We sell it to the Iquitos refinery, which is owned by the state oil company, or we have a Houston-based trading company that buys it, FOB Bretana, and they take it all the way to Manaus, where the oil is transferred into tankers of 250,000 barrels of capacity. Give you an idea of the size of the Amazon River around Manaus. We used to take oil also, export oil via the pipeline. You see the town of Saramuro, just north of where we are located. But the pipeline has not been operational for the last couple of years, but we intend to go back to the pipeline later this year. So we may have three robust markets for our crude oil. South of where we are, in the middle of the country, you can see the city of Pucallpa. We are just in Block 131, next to it. We have two technical evaluation agreement areas where we expect to replicate what we see in Block 131. And then south of that is Block 107. So we have positioned ourselves very well in the Ucayali Basin, given that south of us, you see the blocks in the Camisea area. Those blocks nowadays produce more than a BCF of gas a day and close to 100,000 barrels of condensate. So very happy to be positioned in that large basin. So that's where we are located, and I think myself, as a fourth-generation oil man from Peru, we're well positioned to capture some of these opportunities in the future. Here you can see this beautiful graph that shows how we've been growing production since the beginning. Last year, we averaged 17,700. Our guidance is 22,000. We're now north of that. So it's a beautiful thing. In reality, as you can imagine, 2020 was rough for everybody. So there were up and downs on the production. But even through all of that, we have been able to meet our guidance and grow production at a steady rate, as we show in that graph. Similarly, on the reserves, we started with what we call 2P reserves. Those are the proof, 1P, and the probable, that's the 2P, of 37.5 million. Now, on an ultimate recovery basis, we are at 131 million. We just announced last week reserves of 107 million in Bretana, plus another 5 million in the Los Angeles field in Block 131. So there's quite a large potential that we have. In the light blue, that's the possible, which are the most risky ones, but we intend to be able to capture probably half of that. So we have plenty of reserves to continue growing the company and continue providing dividends to all of our investors. You see the value of the reserves is quite outstanding, 1.7 billion on the 2P case. As I mentioned earlier, we have a market cap of 455 million. So I'm hoping that meetings like today, we allow entice investors to invest in this company that has been giving so much money back to investors. The track record on valuation, and this is quite important. You see, we have invested to date $600 million, most of that in the Bretana oil field. And you can see on the value chain how through the cash flow, the dividends, the buybacks, and the value of the different categories of proof and probable reserves, the value proposition for the investors is quite amazing. And you can get a sense, as we show in the last bullet to the left, on the future investment of $645 million, we expect to generate undiscounted cash flows of $2.1 billion. So lots of cash to give into all of the investors of the company. So let's zoom in into the actual main asset of the company. It's called the Bretana oil field. And it's called Bretana because in that area of the jungle, about 100 and some years ago, there was the rubber business, the caucho, and it was a British company that had the concession to develop the caucho, and that's why the local people call it Bretana, because of the British company that had that in the past. This field was actually discovered by Amoco in 1973. That's in the well 1X, just to the northeast. This is 2 years after my father, who used to head the exploration production department for the state oil company, discovered the oil in the Amazon jungle in this area. With 5 wells, he discovered 5 oil fields. So Amoco came, but they never developed the field, and amazingly, it stayed dormant for many years until Gran Tierra came along, a Canadian company that has operations in Colombia, and drilled the well 1X but at the end, they also dropped out. And we stepped in, and you can see how we've been drilling wells horizontally, extending the field. That's why the reserve have gone from 37.5 million on the 2PKs all the way to 130 million. And we continue to capture a lot of that potential. So that's important, So we know the field very well, and this is something that we tell investors: if we're going to continue drilling wells, but in the P2 locations and P1 locations, but on a safe way, and that because we understand the field quite well. Here you can see the potential of these wells. These wells come in, some of them on the left-hand side, the axis, you can see the initial rates, some of them above 10,000 barrels of oil per day, and how much they have cum already. And that tells you that these wells, and you can get an idea that sometimes, as we show on the right-hand side, they pay out in 3 months. These wells on average cost about $14.5 million, and they pay out in 3 months. So there's plenty of cash flow, which is allowing us to maintain ourselves as debt-free and paying dividends consistently. This is the forecast, the latest forecast on production from Netherland Sewell. And our idea is not maybe to grow production to those peaks as we show in the possible dark blue, as we have now facilities set up to produce up to 32,000 barrels of oil per day. So the idea will be to have a nice plateau that will extend the life of this project. And you see on the left-hand side, the contract ends at the end of 2041, but there is a movement in Peru to extend the life of the contracts, but for another 10 years, and will allow us then to capture quite a bit of the possible reserves. That will, of course, change the valuation of the company tremendously. In expansion, as I just mentioned, we have been very careful. We've been drilling always proof locations to upgrade the probable, and as we've been drilling the wells, we've been adding facilities as required. And you can see now we are able to manage 32,000 barrels of oil. As I mentioned earlier, we just this morning reported more than 24,000. And also we have to manage the water from the formation, as this reservoir that is extremely permeable is supported by a very strong aquifer. So the water has to be treated and put back into the reservoir. And so we have Mother Nature giving us all of the energy that we need to produce this field for years to come. Something that we need to manage as well is Mother Nature, given how strong these rivers are. We've been affected by erosion, and it's something that we have reported to our investors that we plan to do. It's a 1.5-year project. We are already studying that. And just to give a sense of the OPEX and CAPEX distribution for this project, more importantly, you can get a sense on these pictures here. 7 years ago, when we were taking over, you can see how the site looked like and how it looks now on the left-hand side. And so it's something that we need to take care of. In southern Peru, near Bolivia, there was a similar case, and we are copying from them. This was La Pastora project. And on the top right picture, you see a highway. That highway actually connects the Pacific coast of Peru all the way to the Atlantic of Brazil. And that erosion was going to end up impacting that road. So they set up these breakwaters, and they have worked fantastically. You see how they have been able to recover some of the site. That's exactly what we plan to do here. This is more detail on the erosion control. And that will allow us then to make sure that we can continue developing Bretana with all of its potential. So let me cover quickly some of the upside that we see. The beauty about the Block 95 is we are in the northern tip in the Bretana oil field, but we have identified, based on seismic that private operators did in the area, a number of leads that we expect to turn into prospects in the near future that could represent the equivalent of 4 other Bretana oil fields. And so you can get a sense that if we could have 130, 150 million barrels of oil in Bretana, this block could end up having more than 500 million barrels of reserves, and production, of course, could more than quadruple in the future. Similar to that, we have in Block 107 that I showed you earlier in south of the Pucallpa city, a prospect that just one single prospect could have more than 500 million barrels of unrisked prospective reserves or resources, let's call it. We are working to get a permit to drill this. We're looking for a partner to come in. Grantier, as we mentioned in the last bullet, has a 20% backing. But we believe that this also could be another company maker, just like Bretana, allow us to reach the close to 500 million of market cap. But that's not all that we have. We recently purchased Block 131, the Los Angeles field. Relatively speaking to Bretana, it's a small field. It was producing 650 barrels of oil per day when we bought it and closed the transaction at the end of November. But the idea here is to be able to drill a few more wells and fully develop the producing formation, allowing us to go hopefully to 4,000 or 5,000 barrels of oil per day, but also tackle some of the two lower formations that were penetrating in the past but never tested. And we see that there's quite a bit of upside on potential for those two. So at the end of the day, we want to do with Los Angeles what we have done with Bretana, which is to triple, quadruple the size of the field and its production potential. And we expect to be able to confirm all of that in the next year or two. And then similar to that, we have two areas that we have recently signed with the state agency that are called TEAs, they're technical evaluation agreements that give us a first option to turn them into license contracts. You can see these two blocks are quite large. They have a number of prospects, not leads, but prospects. So they are ready to be drilled, especially in the northern one. You can read the Agua Caliente trend. So it's always the idea in the oil business is to follow trends. That's what we intend to do in Block 95, following the trend of Bretana. And here they do exactly the same, where the Los Angeles shows you the lower end of that potential trend, or called the Los Angeles trend. So we have two trends that we're going to be pursuing here. Again, replicating what we have done in Bretana and we expect to do in Los Angeles. Quickly on some of the financials, we have currently for this year a capex investment of $140 million, mostly dedicated to Bretana as we continue to grow production. And of course, with all of that, we intend to continue paying dividends to investors. This is a quick view of, based on the guidance, EBITDA of $245 million. So you can see that this is a very strong company that can handle the dividends for years to come. And that's for our investors, something that they look forward to. And talking about the dividends, here you see how consistent we've been with the dividend payments. And our policy is to pay 1.5 cents per share per quarter. We top it off when we have more than $60 million of liquidity. We've been very consistent, as we show. We have now paid more than $100 million of dividends. And we also do buybacks. And more recently, we have slowed down on the buybacks, but we have already done more than $8 million. And we slowed down because oil prices are hovering between $70 and $75, although we feel very confident that we can maintain both the dividends and buybacks even at $70 of oil, and even a little bit less than that. Free cash flow, we do the exercise for our investors. They can see how the free cash flow will behave at different oil prices. But keep in mind that this assumes capex already. So you deduct the capex, you can see the amount of free cash flow that we can have in the company. So at the guidance of 22,000 at $75, we have free cash flow of $66 million. Again, that includes $140 million of capex already spent. So we have the ability to move our capex as needed, as we have no commitments with the government. So we invest when we see that we can make money for the investors. And with that, we're ready for the Q&A section. But I just want to finish that we are known in Peru that we are a company that where energy that generates well-being. and we're recognized for that. You can see on the left-hand side of our camp, that's the Bretana community of 2,000 people, and the district of Puñagua with 8,000 people, we believe is going to be the first district that will count with solar power throughout, and that's part of the work that we do on the ESG side.
And what a powerful word well-being is, Manolo. And some of those graphs that you showed us are indeed things of beauty. And it was nice to learn about your father and how the business is in your DNA. But the acquisition of Block 131 represented an important milestone for PetroTal. I'm just wondering, are there more acquisitions of that magnitude to come? Because with all this talk about the free cash flow, it sounds as though you can afford it.
Well, I'd like to be able to target blocks that come at a reasonable price. We bought the Los Angeles field for the equivalent of $1 per barrel of 2P reserves. That's outstanding. So you can get a sense of the value proposition that we have there. The TAs that have these prospects to be drilled, it's just an eventual commitment to drill some of those. There are blocks you see in that map in the slide 6. Block 64, Block 192, Block 67, 39, that are now shut in. And some of those used to produce quite a bit of oil. They were shut in, Block 192 and the other 67, 39 during the pandemic. So there are possibilities that we've been looking at. The way we have positioned the company in Peru, actually some of the communities ask us to go in and replicate what we have done in the Puñagua district. So we're paying attention to all of those possibilities, So that's a long answer to yes. The answer is yes. We're looking at possibilities like that, as we see some.
And I'm certainly paying attention with the way that you described Lot 107. My ears pricked up when you described it as a potential company maker. I'm just wondering how close you are to choosing a working partner for Lot 107, particularly as it has that potential to be a company maker.
Well, we just launched a process to bring a partner, and we've done it now that we have completed all of our technical analysis, and also we are getting close to obtaining the drilling permit to be able to drill that exploration well. And so I'm expecting hopefully before year end to find a partner. Under the license contract, we still have more than 2 years to drill that well, so we have plenty of time. So the idea is to have both a partner and the permit by year end or beginning of next year.
And in terms of relationships, has there been any conversations with Peru regarding lots 64 and 192, which I can see from that graph are very close together?
Yes, we talk to them often, and we talk to them about going back to the pipeline. They own the pipeline as well as the Iquitos refinery and the one also in the coast, the Talara refinery. So they're well positioned. We've been talking to them. Most probably, given that it's a state oil company, they will need to do a tender for those blocks. And we look into it to see if we participate. But they're quite interesting for sure.
So if I was to do a pie chart of your business, because looking at that graph there, how many development wells do you have? How many are in production, and how many wildcats are being thrown into the mix?
Well, I'll show you in the case of Bretana on the reserves in the map here. You sort of get a sense. We highlight the fact that eventually we have right now 24 producing oil wells. On the 2P case, we will have a total of 40. So we still have 16 wells on the 2P case, which is the proof and probable. And we have a total of 50 wells on the 3P. So there's still a lot of room We are just past halfway on the development of Bretana. Then, as we show you, we have other leads similar to Bretana. So each one of those four will require a well. And of course, we find oil the size of this type of field, then it's going to require a similar number of wells. So there's activities to be done for years to come. But something important is the way we like to do things, step by step, and we bring cash flow quickly, and we use the cash flow to continue developing and growing the company.
And in the way that you like to do things, increasingly it's about automation. I understand that the Los Angeles oil field at Block 131 is fully automated. So is that setting the gold standard for the rest of your prospects?
Well, ideally, yes. We first thing as an oil company, safety is key for us to have a fully automated oil field, and I give credit to the prior operator that did all of that, as we bought it already in November. And we are even bringing a new drilling rig to drill the new wells in the Los Angeles field that is going to reduce both emissions, even noise emissions. So we always pay attention to those details.
So you've got a new rig coming from Houston. I'm just wondering, is it new or is it reconditioned, so as good as new? I'm just wondering how confident you are about its condition and how it's going to perform for you, and whether it's silent or noisy.
Well, the rig is new in the sense that have never been used, even though it's a 2017 rig that an oil company bought for their own assets, and they could not never use it. Ended up selling it, and we were fortunate enough to buy it at a good price. And given that it's sort of a new generation type of oil field, oil rig has much lower emissions, and even the noise emissions. As if we drill near communities, it's important to have as quiet as possible of a drilling rig.
You mentioned well-being in your conclusion there, which certainly made me feel reassured and very warm inside. But there are social issues where the business is located. Peru is beautiful, but known for social issues and national strikes. 2 years ago, there were some scary blockades that impacted you. So how would you deal with that, hypothetically, if it would happen again? Or do you think that all is calm now and for the foreseeable future?
As I mentioned at the beginning, Peru is still a poor country, especially in the Amazon jungle of Peru. And there are a lot of communities that don't have any of the facilities that are to count as a given. Power, fresh water. There's rampant anemia among young kids because of the poor water quality. So we've been tackling all of that, but for us, at the end of the day, it was the need to empower the local communities, and to empower them, you need to have a combination of both education and resources. And the resources, the ones that the government from Lima used to send to the region, mostly stayed in Iquitos. So we did two things. We changed the way the government distributed that money that will go from the capital to the jungle, in such a way that 10% of the money going under the concept of the canon will stay in the producing district. 20% will be shared among the other districts of the producing province. So now you start getting a large amount of money coming into the producing district. And we set up our own 2.5% social trust fund, which means that 2.5% of the fiscalized production is shared with the local community on a private basis, because the canon goes to the municipality, and while the other one, they don't have to follow all of the government rules and the bureaucracy. But on a combined basis, the budget of the Puñahua district from 2023 to 2024 increased by more than 20 times. So now they have the money, and we've been helping them with the governance. That's why I emphasize the G on ESG, so they can actually execute. And we see that already. We are working with them on the solar powers, internet for everybody, the fresh water, and on and on and on.
Okay. That's a big responsibility on your shoulders. So finally, Manolo, healthy dividend, share buyback, 20% production growth, operational excellence and automation. How do you intend to keep pushing out the envelope?
Well, one thing is that we have built a very strong team. As I mentioned, we have here my CFO and CEO. We have a very strong team in Lima, Peru, in the field. And it's given the team that we have put together will allow us to replicate this in other opportunities that we have now in Peru and some of the ones that we're looking at. And, so that's the way to do it.
It certainly is the way to do it. Manolo Zúñiga of PetroTal, thank you very much indeed. I've thoroughly enjoyed working with you this evening. Don't be a stranger. Thank you.
Well, not at all, Sarah. Thank you so much. And thanks to everybody.
Thank you.